Welcome to the Riskwiser Zone. I'm your host, Lewis. The market is abuzz with speculation about the Federal Reserve's next move, and it seems investors are now betting on a rate hike rather than a cut. This shift in sentiment comes amid rising concerns over surging oil prices and their potential impact on inflation. According to recent reports, bonds sold off on Friday, causing the 10-year Treasury yield to jump to its highest level since July, reaching as high as 4.46%. This move suggests that investors are bracing themselves for a more hawkish stance from the Federal Reserve, with some even assigning a 20% chance of a rate hike by September and no probability of a rate cut in 6 months. The change in market expectations is largely driven by comments from Fed officials, including Chairman Jerome Powell, who has taken a hawkish tone in recent statements. Additionally, the ongoing situation with Iran and its impact on oil prices has introduced new uncertainties into the mix, making it difficult for investors to predict the Fed's next steps. As we explore this story further, it's essential to consider multiple perspectives and analyze the data objectively. The spike in yields is one indicator that strategists are watching closely, signaling potential market stress. Meanwhile, equity markets and oil prices are also sending significant signals that policymakers cannot ignore. The tech-heavy Nasdaq Composite dropped 2.1% on Friday, sinking further into correction territory, while the Dow Jones Industrial Average and S&P 500 also experienced declines. As investors navigate this complex landscape, they're looking for clarity on the Federal Reserve's plans and how they might impact the broader economy. We'll continue to monitor these developments and provide you with in-depth analysis and insights from experts in the field. For now, it's clear that the market is entering a period of heightened uncertainty, and investors are advised to stay informed and adapt their strategies accordingly. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. We're glad you're still with us as we dive into the world of cryptocurrencies and explore the latest developments that are making waves in the market. Now, I know some of you might be thinking, Lewis, what's going on with Bitcoin? Well, let me tell you, it's been a wild ride lately. The original cryptocurrency has extended its slide, falling to its lowest level in more than 3 weeks, and traders are turning defensive following the year's largest options expiry. Now, I want to give you a balanced view of what's happening here. On one hand, we have roughly $14 billion of Bitcoin options expiring, which is a significant event that can trigger greater volatility. And indeed, we've seen about $450 million in liquidations in the past 24 hours, according to data compiled by CoinGlass. But on the other hand, some experts believe that a credible ceasefire in the Middle East conflict could push Bitcoin above $75,000, triggering further gains as bearish positions are unwound. It's also worth noting that Wall Street traders are driving stocks to their longest weekly slide since 2022. With concerns about a protracted war in Iran keeping oil prices elevated and fueling inflation. And this, of course, has a ripple effect on the cryptocurrency market. Bitcoin has been stuck in a range since the conflict began, and it's down around 50% from its all-time high. Now, I know some of you might be thinking, but Lewis, what about Ethereum? Well, Ether is also feeling the pain, falling about 4% to $1,980. And we've seen significant outflows from crypto-focused ETFs, with investors withdrawing $171 million from spot ETFs on Thursday. As always, I want to remind our listeners that the cryptocurrency market is highly volatile and subject to rapid changes. It's essential to stay informed, do your own research, and never invest more than you can afford to lose. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the latest news from the financial world. We have 3 stories that caught our attention, and we'll break them down for you. First, Australia is taking steps to address its energy concerns amidst the ongoing war. The country is expected to face significant challenges in meeting its fuel demands, and the government has announced plans to intervene in the market to ensure stability. This move aims to mitigate potential shortages and price hikes, which could have far-reaching consequences for both consumers and businesses. In other news, Premium Global Income Split Corp. has released its year-end results, revealing an increase in net assets attributable to holders of Class A shares. The fund's investment portfolio is managed by Mulvihill Capital Management Inc., and it employs a covered call writing strategy to enhance income and reduce volatility. This approach seems to be paying off, with the fund reporting a net gain on investments. Lastly, we're seeing the impact of global events on various industries, from energy to finance. The war is affecting supply chains, trade relationships, and market sentiment, leading to increased uncertainty and risk. As investors, it's essential to stay informed and adapt to these changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.